Good morning, good afternoon, good evening, everyone, and welcome to the last 2021 webinar from FP&A Trends. Today is subject about rethinking the traditional approaches to cash flow management. My name is Larissa Melnichuk, a founder and a managing director at FP&A Trends Group, an international FP&A board, and I'm here today to facilitate this discussion. Just a quick reminder that today we are joined by over 550 participants from 66 countries around the globe. Welcome, everyone. Quick reminder about the agenda. Today we are going to talk about why cash is king for FP&A, cash flow forecasting, why traditional profit-driven mindset needs to be rethought. We will look at the subject of integrated cash flow planning and how to achieve it. And also the last one is about how technology can enable efficient, effective cash flow management. Of course, conclusions and recommendations and Q&A session at the end. Now it's a good timing for me to introduce you to introduce our panelists to participants. I would like to invite everyone to switch on your cameras and join us, please. Again, we have international panel across Europe and North America. And let me start with quick introductions. The first one is Mike Hartwait, who is Corporate Finance Director at Walmart. Mike is based in the US. He has more than 20 years of experience in finance, FP&A, as a practitioner and as a consultant as well. He is a very strong advocate of cash flow and discounted cash flow analytics, and he's a regular speaker at different conferences and in particular at FP&A Trends webinars. Mike, it's so nice to see you here again, and welcome.
Great, thanks to be with you. Nice to be with you.
Thank you. The next participant is coming from Canada, Gareth Denny, who is VP of Finance at Lindy in Canada. Gareth also has over 20 years of experience in finance, FP&A, and supply chain management. He's an advocate of long-range and integrated planning process, and he's a corporate problem solver. Gareth is also a member of our Toronto FP&A board. Gareth, you're welcome.
Thanks, great to be here.
Thank you. And the last panelist is coming from Europe, from Germany, Dr. Arif Issa, Director Solutions Management at SAP. Over 20 years of experience in ERP, finance, treasury, and working capital management. Very passionate about how technology and new trends can transform the way we work, and in particular, how we manage the cash flow. He worked as a solution owner for different subjects, and today he's going to talk about how technology can help with cash flow management. Arif, you are welcome.
Thank you, Larissa, and thank you for having me here as well.
Thank you so much, everyone. Now you can switch off your cameras just for the few general slides that I'm about to present to everyone. So FP&A Trends Group, just a quick introduction, a reminder that we are a managing international FP&A board with 27 physical chapters in 16 countries on 4 continents. Hopefully in the year 2022, we are restarting our face-to-face meetings. And also we have our FP&A strategic advisory and research service as well. This is something that we started quite recently. About this webinar, there will be 2 polling questions, and your participation is very welcome. There will be interactive Q&A session at the end, and you can start asking questions straight away, even now through the chat box. Presentation is available in handouts, but also within 2 days, we will send to all the registered participants both recording and PDF version of the presentation. And another thing, we always review the survey after each of the presentation, after each of the webinar. So please, if you can stay and fill the survey, it's important for us. Before we start, thank you so much to our technology partner, SAP. one of the world's leading provider of modern FP&A solutions. Thank you so much, SAP, for making this possible. A very quick introductory slides just to set the tone for this today incredible, very interesting subject of cash flow management and how FP&A involved in this. I would like to start with very quick introductory quotes. The one from Michael Dell, founder at Dell Technologies. He said that we were always focused on our profit and loss statement, but cash flow wasn't a regularly discussed subject for us. It was as if we were driving alone, watching only speedometer, but when in fact we were running out of gas. It's a quick reminder, it's a great reminder for all of us in FP&A, as the majority of FP&A departments still continue to be very much connected to P&L management, to P&L forecasting. And another very powerful quote from Sir Richard Branson, that never take your eyes off the cash flow because it's the lifeblood of business. So very good reminders for us, and especially in this incredible environment of uncertainty. When we talk about FP&A and involvement of FP&A in cash flow management, cash flow forecasting, in reality, we say that we can keep the value going through these three important indicators. The first one is management of liquidity. It's through short-term focus in our cash flow forecasting and planning. Of course, it's the value creation as well. It's the long-term focus. We always say that FP&A helping to manage the value of the company. So this is the way how we do this, through long-term focus on our cash flow forecasting. And of course, the third aspect, it's all about performance management, and this is also the role of FP&A. And when we look at performance management from cash flow point of view, from cash flow analytics and storytelling, it's the most powerful one. And today, of course, the subject of cash flow management and FP&A's involvement, it's a huge subject, and it's not enough to have only 1 hour to talk about this. But in reality, what we would like to do today, we would like to look at these three facets. We will look at this from the point of view of mindset. This is the first presentation. Then integrated cash flow management, the second presentation, and technology role in cash flow management. It would be the third one. So let us look at the first facet. And Mike Hathwaite, corporate FD at Walmart. Mike, if you can join me, please. And the floor is yours. And the subject is why the traditional profit-driven mindset needs to be rethought. I know how passionate you are about this subject. So, yeah.
Thanks, Larissa. I appreciate it. Thank you, everyone, for joining. So let's talk about cash flow mindset. So I think when people think about a cash flow mindset, they think originally just the metrics, right? So they think of cash versus profit. It's just different metrics, right? I think what we'll see here in a second is that it's much bigger than that. Some things are pretty obvious, but we're going to go from like top to bottom. So more obvious to sort of less obvious. So when you have a free cash flow mindset, as Larissa mentioned, you have a complete financial view. So that's why I think cash is really king in an FP&A world. It's a complete view. It's not just a P&L view. It's not just a balance sheet view. It's a complete view of your financials. It's more transparent. It's harder to manipulate. It's the complete view. On the other side, when you think about a profit and loss mindset, profit and loss is a partial financial view, right? Which in itself is not a big deal, right? It's the profit and loss. But the problem is when you try to maximize a partial financial view or a partial view, you're really maximizing what they would call in the manufacturing world a local efficiency. So what happens is you improve something only to kind of bottleneck things up later down the road. As we move down, we also think about cash. We think in terms of sources and uses of cash, so inflows and outflows of cash. Because of that, the detail is not that important. This makes it more agile. You can run scenarios, change rules, create multiple models, creates a lot more flexibility in the system. In your traditional profit and loss mindset that we all have, it tends to focus very much on account detail and detail in general, right? And the result is really a false sense of precision. On the cash flow side, you can be detailed, you can have more detail, but the need isn't there, right? It's more about the sources and uses of cash, and that kind of creates that more flexible environment. Moving down to things that are even less obvious when you have a cash flow mindset. When you have a cash flow mindset, you try to invest up front, right? So you look for bottlenecks, you look for things you can break, and you throw cash at it. You make small little investments, try to break down that bottleneck, which then creates an opportunity that you can expand on, create market share. Ultimately, you have good market share and you start to plateau a little bit on the market share. At that point, you're a cash cow, you're generating a lot of income, you're cutting back on your overhead expenses and maybe some of your CapEx. You're generating a lot of free cash flow, you're investing that back in the business, and eventually you sort of decline and sort of fade off. That's the whole life cycle approach. When you have a P&L approach, it's those rigid timeframes that we all know about, right? So it's a 12-month AOP, 18-month rolling forecast, 48 to 60 months LRP. So those rigid timeframes that you use for variance analysis that don't really, kind of constrict what's really going on. And the last obvious one is when you have that life cycle approach, you can take more of a portfolio approach to managing your business. So you know that your business is broken down into several different life cycles. You can manage each life cycle, each entity that exists in that life cycle. They require different matrix, different leadership styles. It's just better to keep them grouped that way rather than to do what we do in the traditional P&L mindset, which is run a consolidation. When you consolidate everything, you really sort of average everything out. So all of your opportunities kind of average into a straight line, which is kind of ironic because you're building a lot of detail account-wise, and then you're sort of consolidating out that detail and averaging it out. So when you look at the kind of life cycle or the cash flow mindset, free cash flow is more about growth, and P&L is really more of a justification story. And the conclusion I'll make a little later on, and I leave it here in the title, it's really impossible to maximize profit and value or shareholder value at the same time. You have to invest in growth opportunities, which are going to take a hit to your P&L, but later they're going to be your cash cows, and that's where the valuation comes in. So you can't really think about the two in the same way. So let me give you an example here. We're going to go to the next slide. I've just got 3 slides in total. This next slide is kind of like a playbook for cash flow. So what you'll see here on the matrix here is we've got, we've got a cash flow statement here, right? So we have cash flow from operations on the left, which is measured by low and high. So low could be negative cash flow from operations. High is obviously very positive, good cash flow from operations. And then at the bottom there, we're looking at cash flow used in investing. So we're always investing in the business. The question is, are we investing to build the balance sheet? That's growth CapEx. Or are we investing to maintain the balances, just replace the depreciation? That's more of a maintenance type CapEx. So when you do that sort of cash flow cycle, life cycle playbook, you always start in the bottom left corner, right? You're looking for opportunities to break, bottlenecks to break. You do a little seed investment into that. You get some traction. You move up into the next quadrant, which is the growth quadrant. You're generating sort of higher cash flow from operations. You're still investing in growth CapEx. You're investing more into the problem. And eventually, hopefully, you're sort of kind of reaching maximum market share, and you're sort of stabilizing your customer acquisition costs, which switches you over more into a plateau type mindset where you're able to manage your costs better because you're keeping your market share high. You can now reduce some of your overhead costs, and your CapEx switches more to a maintenance approach to CapEx. If you want to extend that plateau stage, right, you're thinking about like product extensions and things like that on the same asset base and so forth. And when you're generating those cash flows, it's really incredibly important that you reinvest those back into new growth opportunities. So we've all seen this landscape, but it's putting it into practice in an FP&A world, which is really hard. And that last quadrant there is just the decline, right? So now we're sort of just focusing on our existing customers, gradually trying to shrink that balance sheet because our ROI is getting worse and worse and worse. So shrink the balance sheet, get the denominator down, and then you ultimately make a decision when to go somewhere else when you're not maintaining or you're not creating an economic profit. So your return is less than your cost of capital. Then you're not creating value. So that's the typical playbook. Some of the details in there may differ by company, but that cash flow playbook is pretty much the same playbook for everyone when you think about it and put it in that perspective. So let's just conclude on one last slide. We'll kind of walk through everything in more of a visual representation. So we talked about when we have a cash flow mindset, we think about things in outlays and inflows of cash. So sources and uses of cash. Typically what happens is the outlays kind of come first and then tail off. The inflows kind of start off slow and then kind of ramp up. On average, that gives you that life cycle curve that we talk about. We look at that across different stage gates, and we recognize really important thing here is that the earlier stage gates is where the value is created, right? That's where we're creating the value, but that's not where the profit is. That's where we're creating the value. As we move to the outer stage gates, or the further ones, now we're doing the value realization. Value is growing less fast, but we're looking at things like income and ROI and so forth. When we look at that on a more portfolio perspective, we actually see that we have multiple life cycle curves going on in our business, and we need to kind of manage those in the stage gates that they're in. So that's really critical as to how you react there. And you need to realize that some of your initiatives, they're going to be on track, they're doing really well, that's great. Some are going to get delayed, there's going to be issues, you're going to have to firefight and resolve those. And some, you know what, it's just time to pull the plug on those. But it's managing that life cycle, which comes with a cash flow forecasting mindset, which is so critical. So Larissa, I'll pass it back to you for a polling question, please.
Thank you so much, Mike. Excellent presentation. First of all, there will be a quick discussion. I would like to invite all our panelists to switch on the camera, and then we will have our polling question asking the participants to share their view on the subject. First of all, it's an excellent reminder to us about importance of cash flow management. Thank you, Mike. And Gareth, any commentaries from your side, please?
Yeah, I mean, it's great to think conceptually about this. Particularly relevant to some stuff I'm going to go through is the different life stages that particular business is in, and how that might affect how they in practice forecast cash flow or plan cash flow.
Thank you, Gareth. Arif, any commentaries from your side, please?
Yeah, first of all, thank you, Mike. It's really great insight, and especially on the two topic, which I think I have to shed some light here, because we have a discussion with many clients in two topic, which Michael highlighted. The one is life cycle. Indeed, that's most important. The second one is the analytics. I mean, you have to have an insight. If you cannot measure, you cannot manage. And that is pretty nice to see the life cycle here, where you, on one side you have the life cycle, the other side you have the impact, and there is no need to trigger any action if there is no impact, and which nicely here described. And we see that's many clients, they are focusing on the life cycle because the business has changed, they have a different system, and they would like to have a kind of a stage where they can measure the impact on the cash flow. And this is really a nice presentation, like here, value creation versus value realization. So thanks, Michael.
Thank you, Arif. Once again, Mike, thank you so much for this excellent reminder about cash flow mindset and also about the strategy, how to manage this. Now, this is a good timing to hear from our participants. We would like to hear what is happening in your world from the point of view of FP&A involvement and cash flow management. I'm launching the poll, and as soon as you see it, if you can start voting. And we would like to ask you if you can choose the statement which is the best description of your current process. So how involved is your FP&A team in cash flow planning and analytics? The first option is not a priority for the organization. The second one, not a priority for FP&A, usually performed by Treasury. The third one, it's priority for FP&A, and FP&A is sharing some metrics with the Treasury. And the last option is cash flow planning is the key component of FP&A. Please, if you can continue to vote, just a few seconds, choose what is the best description. Thank you for your votes. More than 65% of you voted. Just a few seconds. I'm closing the poll. I'm sharing the results with everyone. Some very interesting results and quite pleasing as well, because I can see that the majority of you, 44% actually, cash flow planning is the key component of FP&A. Not the majority, but the biggest percentage of votes. 27% say that it's priority, but it's still not standalone. You're sharing some metrics with Treasury, and 7% not priority for company, 22 not priority for FP&A. It's solely performed by Treasury. Mike, would you like to comment on this, please?
Yeah, I think it's this is interesting. This is good. I think I would have expected something similar to this. I think when you look at the bookends of this, right? So the first and the last one, you know, for very few people, it's a it is a priority for most people, is what we're saying, right? It's the life, you know, cash flow is the lifeblood of the business. I think everyone seems to be, you know, recognizing that. I think especially in times of uncertainty. So that doesn't surprise me at all. And then obviously the last one is very nice to see as well. The cash flow planning is a key component. You know, we do often struggle with, is it a component of FP&A or is it part of Treasury? And we think, you know, with programs like yours, Larissa, it's just so great to really be able to open up FP&A to other parts, which, you know, might have historically fallen under Treasury or, you know, other areas like M&A or investor relations. I think FP&A can play a bigger role in a lot of these things, and cash flow is a good tool and measure to use to form that connection.
Thank you for your commentary, Mike. Thank you everyone for voting. This is the time for us to move on. We have to look at our second facet, and we discussed integration. So what is integrated cash flow planning and how to achieve it? I would like to ask Gareth to join us. The subject of Gareth's presentation is integrated FP&A, how to achieve it. Gareth, who is VP of Finance at Lindsay, you're welcome, and the stage is yours.
Thanks, Larissa. You know, we went through some great concepts there with Michael. Now on the next slide, you know, I'd like to take everyone through kind of, you know, what we see in practice. If any of you guys were scratching your head thinking, you know what, we don't spend a whole lot of time thinking about cash forecasting. We don't spend a whole lot of time, you know, dedicated to really making sure we've got a good cash flow forecast. You're not alone. You know, as Michael indicated through some of his talk, you know, a lot of us, especially in FP&A, spend a whole lot of time and focus on forecasting the P&L. We do it to the most minute detail. And then for cash flow, you know, we might do a cursory high level view of it, but it's not to the degree and it's not to the effort or focus that we're focusing on the P&L. And really, you know, there's something to be lost there by doing it like that, because you're not really maximizing your long-term value if you're not focusing on your cash flow enough. You know, when we think of, you know, there's a whole lot less discipline spent on the forecasting, all of those inputs, you know, different departments, you know, the source departments for those inputs aren't necessarily even involved in the forecast a lot of the time. A lot of the time it might just be, you know, in isolation, the Treasury department doing their high level forecast on, you know, high level averages. And so what you end up getting is, you know, if you've got garbage in, you're going to get garbage out of that process. So on the next slide, you know, I'd like to talk about, you know, why it's important in several of the life stages that we went through earlier. You know, if we think of liquidity management, you know, that's fairly important in the decline in investment stage. Think of companies like a Sears or a Wayfair. You know, they could run out of money. They're often spending more than they are bringing in terms of cash, and so they need to know how much money they have and how much they might need to be funded to keep their operations going. So highly important in those stages. If we think in terms of more the plateau and you know, bigger companies in the beginnings of a decline stage, think of larger grocery chains, think of a cash cow company. They've got a lot of different bank accounts. They need to move money around and manage those bank accounts and understand how much money is coming into each of the accounts and how much they need to have in each of those accounts. And so they really need to try and optimize, the costs of managing those accounts, the balances in those accounts, and the actions that they're taking on any spare cash that they have. With debt management, this is where it's, vitally important, in the investment and growth stages, thinking of like a startup or a high growth acquisition type of company, managing your debt ratios is highly important to lenders. If you're not doing a good job of managing those debt ratios, it's going to cost you more to borrow money. It also, lenders might not want to lend you money if your ratios are too out of whack. And so highly important to think long-term in those cases and have a good, robust cash flow forecasting and planning process in place. On the next slide, what do we see in practice? There's some companies that really don't have much skill in doing cash flow forecasting or cash planning. They really don't have much of an idea where cash is going to sit. A lot of other companies, do a very high level, very cursory job of forecasting and planning their cash. They're deeply funded. There's less urgency around how they're going to forecast. On the next slide, we talk more about the best practice companies, and they do a much better, much more detailed job. And when I say detailed job, I don't mean to the minute detail that you might do on a P&L. It's just they look at what particular inputs are important to cash flow, and those broad inputs, they do a good job on those inputs. It's highly integrated with every department that manages those inputs. So your procurement department, your sales team, your finance treasury teams, your AR team, all the teams that manage those important inputs are included in the same process, working towards the same goal in that cash flow forecasting and planning. You end up with a very long range focus. So you're looking out, beyond just a year, a month or two. You're looking out, a year and beyond, managing where you need to be for cash. And it's highly automated usually. It facilitates just one version of the truth and allows for very, much more accurate and faster scenario planning if you want to do different scenarios. So now that we've talked about the worst and the best, where do most companies land? They land somewhere in the middle. On the next slide, we talk about, generally your Fortune 500 companies, your mid-sized companies, they're going to do they'll do a decent job of their cash flow forecasting and planning, but they're going to do it a little more short term. It's not as long range as best practice would do. They're looking out a few months. They're generally basing it on average inflows and outflows, so they're not getting the best input data or input forecasts. They're just looking at how things have flowed in the past and kind of forecasting based on that. And it's often disjointed. Treasury will have their point of view of cash flow, finance or FP&A will have their own view. And usually there's not just one version of the truth, there's about 3 or 4 different versions of the truth, and it's very Excel based, so no tool helping to drive that, streamline that one version. So next slide, we talk about why is it important, or sorry, how do we improve the forecasting for cash management? And it really comes down to implementing a good process, influencing your culture, and augmenting those with good tools. So if we think of culture, how do we put in measurable metrics and hold people to those metrics? People are very often held to their expenses on the P&L, forecasting those and coming in on forecast. Often the cash flow inputs that we forecast, it's expected that we miss because we don't do a great job of it. And so people aren't really held to account. And so we need to create measurable consequences around forecasting and doing a good job of forecasting those inputs. Thinking of how much we hold people to account for forecasting and planning their P&L, and kind of applying that, maybe not at the same level of detail, but the level of accountability on the balance sheet and cash flow. And really just promoting a culture of cash flow being important, helping people understand just in the business, even in some of those departments, your procurement department, your sales team department, why those forecasts are important and how it benefits and maximizes the value for the company. And then, as I said before, it needs to be highly integrated and be a long range view of where you're going to be. As it's a long range view, it can't just stand in stone from there. It needs to be dynamic. As things change, you need to be able to change your forecast and planning and be able to capture those changes through your process. So, once you've got that culture and process in place, as we think about tools, often people think about, is it the chicken or the egg? Do you need the tools to get a culture and process in place, or do you need your culture and process in place to get the tools? I think of it in terms of, if you're going to make a commitment to changing your culture and your process and having best practice process and planning for cash flow, you want to invest in your tools to help facilitate getting there. If you're not going to make that commitment, then investing in your tools is not necessarily going to get you there alone. You need to first commit to getting the culture and the process in place, and then looking at the tools to help facilitate that one version of the truth, help facilitate getting, being nimble and being able to be dynamic and scenario forecast and properly view and plan how your cash is going to come in long term. So as I conclude on this final slide, I welcome any commentary.
Gareth, thank you so much for this excellent presentation on importance of integrated cash flow management. While the panelists are joining, just my quick reminder to all our participants that the first step for us for integration and in FP&A, it's obviously integrated three-way modeling. So make sure that your planning process is based on the model of P&L, balance sheet, and cash flow. Mike, can you join us as well? And we are starting a quick commentary, quick discussion. Michael, so what would be what exactly resonated with you after this presentation?
Yeah, first of all, Garrett, great job. Thanks for doing kind of a double click and kind of drilling in and giving us a little more context around what it's like in the real world. I think, when I sat through the presentation, I think what really struck me was like the opportunity that we still have. So, there's just so much room for people to embrace cash flow more and take that kind of cash flow mindset. I think we're sort of getting stuck in all these other kind of more detailed options, and we sort of, it's paralysis by analysis. So I think to get that right, I like this slide here. I think starting with culture, and they always say, right, culture eats strategy. I think you got to have the want, you've got to have the focus, you've got to want to have that growth mindset, you've got to want to increase shareholder value above and beyond short-term profits, and it all starts there. But cash flow doesn't need to be just long-term either. It is the lifeblood, so it permeates everywhere.
Thank you, Mike. Arif, what would be your commentary, please?
I think, first of all, thank you, Garrett. I think that is different view on cash planning as highlighted by Michael. Michael was talking about change management, mindset change, and here we're talking really about a user experience. If the user are able to forecast something, then they will do it because the tools should be in place. The authorization to access data from cross department, that's really important. The integration to cross department, the automation should be in place to have a single source of truth, because at the end of the day, the user should decide, okay, that's the best way which I can increase my profitability and increase my efficient work. That's why I like the combination between the mindset, thinking about the mindset as a soft factor where the process as a hard factor, if you combine both of them with the overlay using tool, indeed, that will help the planner and the forecaster to do the best job what they have to do.
Thank you so much. Thank you for commentary, Arif, and once again, Gary's excellent presentation. Now this is the time to ask our participants, what is the process of cash flow management from the tools point of view? I'm launching the second poll, and as soon as you see this polling question, if you can start voting, once again, you should choose one option, which is the best description of your process. What planning tools for cash flow planning do you currently use? Is it Excel? Is it ERP module? Is it a dedicated FP&A system? Or is it already integrated performance management platform? Please, can you continue to vote? Just a few seconds for you. Just choose what is the best description. I'm closing the poll now, and I'm sharing the results with everyone. Yes, it's not surprise. 75% still use Excel, only Excel for cash flow planning. 14% have a dedicated FP&A system that they use. 6% have integrated performance management platform, and 6% use for this an ERP module. Very quick commentary from you, Gareth. What do you think? Are any surprises here?
Yeah, no surprise there, Larissa. I mean, you know, the biggest planning tool in the world is Excel. So unfortunately, we're not at a place yet, you know, as a society where we've completely embraced through our businesses, you know, the best in class ERP systems and whatnot. But you know, Excel is one of the most flexible tools in the world, and you know, it definitely helps. But you know, there's definitely a case to be made for some of these ERP and EPM tools.
Thank you, Gareth. Arif, I'm sure that you're disappointed. So what?
Yeah, I mean, I agree with Garrett. Excel is still there to stay, and there's good reason to have Excel. But if we consider what are the risks behind using Excel, like security, like authorization, like compliance, it become obvious. Excel can be a help tool, but it should not be the only tool which help me to do the planning. The planning maybe be outside of ERP system, and then sooner or later you have to upload the ERP system. If it's come to evaluation, if it's come to really accounting, if it's come to accounting, which is not the focus of today, but indeed those numbers should be considered. And if you started to do simulation and scenario shift and market shift, Excel will not give you such huge flexibility. But we know Excel is still there to stay, and then with the help of Excel, we can manage the planning. But soon you need the integration to the accounting. You have to think about ERP system and EPM in your case here. Yeah.
Thank you so much for your commentary, Arif, and thank you for everyone who voted. And now this is the time to look at the third facet of new approach to cash flow management, how the modern new technology can support with all of this. Dr. Arif, the stage is yours. So please share with us how technology can enable modern cash flow management. You're welcome.
Yeah, thank you very much, Larissa, and thank to Garrett and Michael to set the scene. And what I would like to highlight in the next couple of minutes, as you can see in the slide, what are the expectations on modern technology? If it's come to technology which could help you to combine the soft aspect which Michael was talking about and the process which Garrett was talking about, indeed you have to have a system which gives you, first of all, the insight to action. So you have to have the insight along the whole cash conversion cycle. So we're talking about how you combine the different sources together. If you put everything in one place and you have the insight, then you need the smart analytics to give you the right insight. The second one is since market is moving and business is moving, the agility is in place, you need a real time and real time and end-to-end processing. So you have to integrate the forecast, you have to integrate the plan, the short term, the long term, even through the predictive. You have to combine everything in a tool which give you the accurate view on your planning. Automation, I think nowadays there is no one questioning the automation, and digitalization is imperative. So we have to have automation in place. And if we have automation in place, of course, on top of real time and insight, you will be in compliance. So you have to adhere to internal as well the external compliance, and especially on this risk what I see from the non-integrated solution, especially on the area of the external compliance, external regulation. And once you have insights, once you have real time, you have automation, of course, you will do an active working capital. And that is similar approach what Michael was telling us about the life cycle. So you should have active working capital to have a visibility in your cash, because if you have the visibility in your cash, you do the right investment optimization and investment decision. And when we would like to focus on three things, as you can see in the next slide, which combine the two aspects of Michael and Garrett. First of all, and completely with you, both of you, that a user experience is important. I mean, it's a mindset change, is a culture change, and for that you need a kind of vehicle to bring to the user in order to really have the standard dashboard to use there for the daily business. And that is important topic. So first of all, if we have a tool in place, the user experience should be given. The second one is the single source of truth. So you have to be in the position to collect, to consolidate, to classify the different source of information, as highlighted by Garrett, DPO, DCO, account payable, account receivable, sales figure. All of them, they should be centralized in a way to give you really the one single source of truth. And once you have a single source of truth, of course, you will make the right action. And with the right action only if you have a smart analytics. Yeah. So put that in context of cash planning and cash management. We do believe that continuous view on bank relation, it's important. The historical view of your actual cash along the life cycle, which has been highlighted a couple of times, is important. Short-term, mid-term horizon, so especially on your cash position and cash and liquidity forecast. And last but not least, the long-term horizon. So the planning cycle, which allow you to do the full-blown and 360-degree view of your cash. And of course, on top of those known and booked value, you need some predictive. You need some predictive cash forecast and cash planning. And only if you have a one system which give you appropriate user experience, single source of truth, and insight to action, you will be in the winner side. So if you can see in the next slide, I give you one example how a smart analytics look like. Smart analytics is really a kind of a dashboard which we can run now a short demo, and you see a kind of dashboard which could help you, as you can see in the next slide, help a cash planner to have the appropriate tools in hand. So here is the latest technology which SAP offer. So it's a different tool as a different application where cash planner can access. I would like to highlight it only the one aspect of the smart analytics. I'm accessing the smart analytics, and I say, okay, for the cash planner, and you see here that is system prepare me all information what I need, prepare me information about the liquidity and the history of my liquidity for those region where I am responsible for. In this example, I am responsible in Germany, and you see I'm breaking down the liquidity by region focusing on business entity and focusing on position group and the currency. And the next one will be, I would like to see my cash position of today. Similar, the system prepare me a lot of information broken down by region, by business entity, by account currency, and of course by bank account, because at the end of the day, I need not only my cash position, cash forecast, but I need the liquidity forecast for the next 90 days. And this is really a nice one, integrated and things which Garrett was telling about, the tools which help me to have the full blown. You see here, the system give me really the single source of truth for 1 week. In my forecast, I see on the right side what are the contribution for 1 week, and of course you have to have a back looking. So that's the actual cash flow, which give me the actual cash flow for the next for the last 90 days. So with that, I would like to conclude. As you can see in the next slide, technology enable you to have a precise cash flow, only modern user experience. That's important, because this one will increase productivity, efficiency for the cash manager and cash planner, and they will help us to do a cultural mindset change. The second one, using high quality single source of truth will reduce the cost, because consolidation is not needed. A lot of Excel should not be used there. ERP can be used in order to consolidate everything in one place. And last but not least, if you have real-time data for the insight to action, will help you to lead to conscious decision and tangible impact, as highlighted by Michael at the beginning. With that, I hand over to Larissa. Garrett, Michael, any comment from your side as well?
I thank you so much for reminding about importance of technology in the modern process. Thank you so much. I would like to ask our panelists to come and join us. Mike, and you are the first to comment quickly about the role of technology.
Yeah, I think great job, really well done. I think what a system really does is it integrates all your different levels of planning that are going on. So strategic, financial, tactical planning. It's important that we don't just, focus on one element or only operate in one element. We really need to have that sort of integrated approach. And that's really the holy grail. That's been the real challenge. Certainly it's something that you can't do in a spreadsheet alone. So you really need to kind of think big and think through your integrated strategy. Certainly there are areas you can start with first and kind of move into things, but having that kind of vision, complete vision, and then having the technology to back that up, I think is critical.
Thank you so much, Mike. And Gareth, a quick commentary from you, please.
Yeah, I mean, it goes without saying how important technology is. I mean, the two paramount measurements of a good FP&A department is speed and accuracy. And, there's only so much time and resource to spend on forecasting and planning the elements of one's business. And, if technology helps with the speed and accuracy of your cash flow forecasting, then you're able to prioritize the cash flow forecasting that much better, make better decisions and more accurate decisions. And so, it just helps things be better and easier for the FP&A team.
Excellent. Thank you so much for commentaries. And once again, Dr. Arif, thank you so much for this excellent presentation. Before we go to key takeaways and then Q&A session, just a quick reminder to everyone, please continue to send your questions. Even if we don't have enough time to answer all of them, we will do this after the meeting. So now this is the time for very, very quick, because of the timing, it's like 20, 30 seconds, key takeaway from each of the participants before we go to Q&A. So Mike, your 20, 30 seconds, what is the key takeaway from this session? Yeah,
just as the title says, develop a mindset. Question yourself, ask yourself, do we have a cash flow mindset? What does it take to get there? What benefits can we get from that? just start there. Start with the culture. Start with asking those kinds of questions, and it's amazing where you can go from there.
Thank you. It's a great reminder, Mike. And Gareth, your very quick takeaway, please.
Prioritizing cash flow, helps with value creation, right? And having that long-term, long view process in place and view of your business is what's going to maximize your value creation. And so cash flow goes hand in hand with that, and just stresses the importance in doing it and doing it well.
Thank you, Gareth. And Dr. Arif, your 30 seconds, please.
Yeah, I think when I look to the question and answer of those bull, I would say please questioning the status quo, because there are some tools, there's something which you can leverage, which could help you indeed to have a mindset shift on the other side to increase your efficiency and productivity by apply and process and questioning the process as status quo. So that is my takeaway here.
Excellent. Thank you so much, everyone. Now let us start the Q&A session. We have a lot of interesting questions, and please continue to send them. Mike, and the first question is to you. I like your life cycle approach. Is it also applicable to the long-lasting products like locomotives, Mike?
Yeah, I think it is. I think it does take sort of a product life cycle approach as well. I think it's a little more holistic in that, when you look at full-blown cash, you have to think about investments as well. A lot of times when you look at things like the BCG matrix or just product matrices in general, it starts as 0 and goes up, right? But the life cycle, cash flow life cycle actually goes down to start with, right? You have to make that initial investment. You have to look for bottlenecks to break. That doesn't always happen when, depending on the kind of life cycle you're looking at. So, there's value in what we call that J curve. And I think if you're really investing in something that's worthwhile, it's going to have that investment. If you're selling lemons on the side of the street, it's probably not a big investment there, but it's also probably not a big opportunity either. So, it's about recognizing that. But I think once you start flowing through it, a lot of the things are very similar, looking for product market fit and so forth. So I think it was a good connection.
Thank you, Mike. Thank you for this answer. Gareth, the next interesting question is to you. Thank you for your excellent presentation. Many execs and stakeholders want to understand how the cash flow forecast integrates with PNL and GAAP projections, especially if there are large swings. How do you address this in your organization? Do you start with GAAP projections and lay over key cash adjustments? How do you educate others in your organization, guys?
Well, I think it just goes back to having that long-term view and really just trying to have the holistic view of where you might end up in the long run, and just applying those adjustments over that long run. And at the end of the day, once you go through that life cycle, you're going to, if it's a positive action you're taking, you are going to end up with more cash flow. It's when you start looking at just fractions of that life cycle, that's when it may not look as good. And so keeping that long-term view, that holistic view is paramount.
Thank you so much for this answer. Dr. Arif, the next question is to you. Thank you for demonstrating the importance of technology for cash flow management. From your experience, how is technology collaborates with the process, and what is the first, good process or a good technology, or both?
Yeah, that's a good question, Larissa. Thanks. I think we should not go to technology because of sake of technology, but rather than which contribution can a technology help in order to improve the process. So I will not say we have to separate between both of them, but we should not always follow technology because it's the hype that the technology should be in place, but rather than there should be a goal, and the goal is have accurate cash planning, have accurate cash life cycle, and accurate cash conversion cycle. And if you would like to apply those three things in your DNA of your cash and FP&A, then you have to go for the technology, and you have to search for the technology, which I doubt that the flexibility of some of the tool in the market will give us, like Excel, with all good thing in Excel, but technology hand in hand with the process, that's a must. And we should not start to think first about technology and then tailor the process, but rather than define my process and then look in the market which technology could help me the best in order to perform and reach my goal, and do the investment life cycle as Michael highlighted. It is combination of both of them.
Thank you. This is an excellent answer. Thank you so much. And the last question to all three of you. It's about effective cash flow management process implementation. If you would like to implement this process in our organization that is very traditional and everything is in silos, everything is done in Excel, what would be your top 2 or 3 steps recommended for this implementation? So if you can be very quick with your answers, and you can build up on your answers as well. Mike, your top 2, 3 practical steps for the implementation of effective cash flow management process.
Yeah, sure. I think, 2 things come to mind. First, I would make sure that you do have that cash flow mindset, that growth mindset. Are you really trying to drive value, or are you trying to drive profit? I think sometimes you just have to have that conversation because the outcomes are very different. So I'd start there. And then secondly, I would do some analytics, right? So go back and actually recreate your company's life cycle curves. So go back, figure out where the significant growth CapEx was, and see if you can start off and try to recreate some of the kind of in-flight life cycles, if you will, and then prove that out. And once you prove that out, then you can kind of take it forward from there. But I think that's where I would look to start.
Thank you, Mike. Gareth, your key steps, please.
First, I think how do you influence culture? You sit with everyone and stress to them why would you prioritize cash flow forecasting or planning? Why is it important? Is it liquidity? Is it growth and funding? Is it what are the reasons, and help everyone understand why it's important to influence that culture. And then I'd map out what are the important inputs that you need to know, and make sure that you're focusing on the people forecasting and planning those inputs for you. If you're capital intensive, then you want the people that are managing those capital purchases, you want them to forecast those very well and focus in on them. So those are the first 2 or 3 steps I would be taking.
Thank you, Gareth. And Arif, very quickly about your steps, please.
I would say we have to, first of all, to have a look to the quality of the forecast from the previous cycle, and to have a look to that and see compared to the actual, and see how accurate the forecast from previous cycle has been, and questioning the manual step, which manual step has been done, and converted the manual step to the automation. So automation. And the third one will be make sure cross-department integration is in place, because at the end of the day, there is no one single source of the planning, rather than many other, and the more Excel you use, the less automation you have in place. That's why 3-step quality assurance, get rid of manual, and do the integration across department. That are the 3 topics what I would recommend first, to have a look to that before we decide it.
Thank you so much. Thank you, Arif. Thank you, all the panelists. Thank you so much. Let me conclude this Q&A session, but there are some other questions that we didn't have time to answer. We will reply to you within 1 week through email. If you still have questions, you can continue to send them. Very briefly, just general information. We have this FP&A Trends 2021 survey that you would be able to download. We will send this also to you by email. So please check, but I would like to ask everyone to start participating at our next year survey that we're about to launch at the beginning of next year. As I said, it was the last webinar for us for year 2021. And then the first one, it will be about top trends shaping FP&A in year 2022 and beyond. It will be January 20th, and the registration process already started. And the next one is based on our research paper. We interviewed and surveyed a lot of people around the globe. And it's about skills of the future, best-in-class FP&A professionals, how to get there. It's January 25th. Please join us, and the registration already started. Before we conclude today's session, I would like to say thank you so much to our sponsor. Thank you so much, SAP, for making this webinar possible. Thank you so much for your global support. I would like to say thank you so much to all the participants for being with us. Thank you for voting, asking the questions, and please continue to stay with us. This is the way how we can communicate. There are many ways how we can do this. And finally, I would like to say thank you so much to our panelists, Mike, Gareth, Arif. Such a pleasure to have you as a team here at this webinar. It was a pleasure collaborating with you, and hopefully we'll have opportunity to meet each other in person very soon. So with this, I would like to conclude the webinar. Thank you so much, everyone. But please stay, and please, if you can complete the survey after this meeting. Thank you, everyone. See you soon.
Thank you. Bye-bye.
Well, bye-bye.
Bye-bye.